Today is Wednesday, December the 2nd, and there's the profile in the Dow. The NASDAQ took a tumble for the first, half hour and then started to move higher. Didn't quite reach yesterday's high. The Dow pushed a little bit above its previous high, as did the S&P, but pretty minor gains. So I don't know what the McClellan oscillator is going to say, but it's not going to make much of a difference probably. It's going to be, somewhere a little bit higher between the midline and the overbought line. The S&P continues to, it made a new high today, so that's a bullish sign. We thought that it might. The McClellan oscillator wasn't quite leading us in one direction or the other, but the volatility index, you can see, turned up a little bit today. Only 0.4, but almost 2%. So there's some nervousness. Now remember, on December I think it's the 18th, but double check, Tesla is going to enter the S&P 500. And it's such a heavy stock that it's going to force companies that, mutual funds, ETFs, that have the S&P 500 stocks that they're tracking, they're going to have to sell some stock in order to buy Tesla, to balance things out. I don't know what they're going to sell, but I don't want to be holding on to any of those. Now, NIO is not an S&P 500 stock. AT&T is, and I'm holding on to AT&T. If it takes a drop due to rebalancing, then I'll just buy more AT&T. So the stocks that we normally track are Apple, had another great day today, came down to test the cloud, so that's really bullish. That does mean that Apple is making a move to the upside now, because that test was important. And you can see that the Chiku span is just out there free and open. Now NIO is the stock this is the stock that's just, it's being day traded. The daily volume today shows, once again, just a little bit above the 20-day moving average. But these are the things right here that show you that the big players are involved. This is the day trader stuff. But it was heavily traded today. Why? Because we came down and we suffered this massive drop at the open, where 161.8% on this Fibonacci. So a drop of 161.8% from the high. That's an important fib, and it's also coinciding with this 200 Fibonacci that's on the bigger cycle that we're tracking, which is, where is it? Let's see. Can't see it, but let's not waste any time. It's just there, and it was just too much of a temptation with two Fibonacci's there. It took a big bounce. Now what happened to me is that my short 43 calls, which were looking like I was going to lose my stock when the stock was trading at 55, that pull back to 43 was just a windfall for me. And I was able to take about a $2,300 profit on the big drop yesterday and today at the open. Rolled those into next week. Did I roll them higher? The rule is, when you're rolling a short call, not to lose any money. So you always roll for additional premium. So I didn't want to give away some of the premium that I collected to roll up to a 45 or a 46. I kept it at 43, and I got about another $1.50. That's just gravy. I'd love to see NIO just keep cycling like this, up and down, so that I can keep the stock and just keep collecting premium. Now look and see how good those Fibonacci's were. So we're always looking at the previous high and the previous day's low to draw Fibonacci's, and you can see the bounce off 161. Then we came up and we played around yesterday's low. Then we came up and we played at 78.6. These Fibonacci's are deadly. This is exactly what the day traders are using. And then it came to 61.8%, and then it sort of stalled at the end of the day when it pulled up to 50. So tomorrow's Fibonacci's are going to be these ones. You're going to take this high, if that indeed was the high. No, it wasn't. So you're going to take this high, right there, and this low right there. You could take that one and just take the average of the two. They're pretty close together. But those are going to be your Fibonacci's tomorrow. The next move is going to be up to 51.55. Actually, there's a 127.2 in there. And let's put that in there. 127.2. Apply. So the next move is going to be at 50.3. And there's another Fibonacci right under there. That's from the other one that we're looking at. So that's a coincidence. So it's going to go up to 50.53. If it pulls back, it's going to be pulling back to 46.01. So follow those Fibonacci's tomorrow. That's the way you're going to make money on that stock. Caterpillar, still trending along flat. Home Depot, we said that it would be rejected by the cloud. Why? Because we had the Chiku span unable to break the 50 yesterday, and that's what happened again today. Where did we see our low today? We saw our low right here. And what does that mean? Let's draw that green line in here. That was the low today. What does that mean? It means that the Chiku span came all the way down and bounced off the bottom of the cloud. So now we're looking at the Chiku span on the daily to be our canary in the coal mine. There's a good chance that it'll finish below this candle tomorrow, but in order to break any higher, it has to pass through the 50. It has to move up above this candle, and of course that would mean it has to come back up and test the cloud. So tomorrow we could be looking at all of these happening. Coming up and testing the cloud will be rejection from the Chiku span on the 50. So that's what I think is going to happen tomorrow, that we're going to see this little move up and then possibly a downward move. Let's take a look at it tomorrow. AT&T now above 29. JP Morgan up 1.72%. The banks are still rocking. That's a good sign that the market is happy with Janet Yellen and the economic team that's being put into place by the new incoming president. We're going to look at a couple more. We're going to look at Square. And Square has had this nice little pullback below 138.2%. So you could nibble on this stock as it gets above 138.2, and then you could go big on it as it gets makes a new high at 214.71. That's where you would move with Square. But right now, if you've bought puts on Square and looking for it to pull back, it didn't pull back to the 127.2 today, but there is a pretty good likelihood that it will tomorrow. Let's just overlay the Ichimoku cloud and see if that tells us anything. It doesn't. If we look at the 1 hour, it does tell us something. It tells us that the high today was right in here. So the Chiku span did not play a role. But look at the 1 hour if you're trading tomorrow. Keep an eye on these two levels, 202 and 190.01. But watch the 1 hour as it breaks out of the cloud, or the 15-minute as it tries to break through this cloud, and the Chiku span breaking up through these candles here. So that's the chart that I would be looking at if you're trading Square tomorrow. It would be the 15-minute. The other one that we want to look at is CVS. Some of my alerts went off today because CVS, is still heading up towards 92.47. So we said that it would be a stock to buy once it passed that level right there, and it did. Let's take a look at those. So that's, you've got a gap up here with CVS, and we're always wary of gaps because they are going to be resistance. So let's take that wick, and let's take that wick right there, and let's say that's the gap. That's where you're going to have resistance on CVS. So if you wanted to buy CVS, you don't have much to go until you're going to get rejection on this gap. but it's going to be when it breaks through this gap, that's when it's going to be time to buy this stock, because it's going towards 80. Now remember, if CVS is one of the partners in the COVID vaccination program, that's going to draw people into the stores, and they're also going to be doing some shopping while they're getting their free coronavirus. And they've got to come back for the second shot to the same location. So that's going to get millions of people in the door of CVS. Walgreens is also rumored to be part of that program. You could take a look at that stock. The other one is Sono, and we've got another pattern happening here, so we can say we forget about that pattern. We've broken out of that one. Now we've got another pattern happening. Whoa, messy. So we've got another wedge pattern happening in here that looks something like that. And we would look for another breakout, so we'll set an alert. If you bought on the first breakout, you want to be buying on the second breakout. So you're going to be looking for a break of the top wedge line right there. 2251 will be the time to buy more of Sono.